Okay, let's dive into the charts, stock market technical analysis, looking for trade setups and areas we can make money in the market. So drop me a thumbs up as I go along if you guys are finding value. It does help the channel. I do need those thumbs up. It's just a little tiny click. Appreciate that. If you're interested in joining the private member group, $5 a month, link in the description of this video below, and cancel anytime. I'm putting additional trade ideas. I comment in there pretty much every day, at least 3 or 4 comments with charts and additional trade setups. I've already sent one out today, and so check those out if you're interested. I can't put out, trading setups, all the ones that I do, and I don't call them all out here on the public channel. So check it out if you want that stuff. All right, triple Qs. We got Nvidia earnings today, so obviously after the bell. So that's going to determine basically the move in triple Qs. The bigger picture is we're really been in a trading range since, it really goes back ultimately here, pretty defined trading range. And you could also probably cover the bottom right there. We haven't really gone anywhere in triple Qs for quite a while, basically back since November. So dropping sideways, and look, recently we hit the top of the trading range, which was the former high was right here. They just barely popped it over a couple days, but the negative divergence still remains. So it made sense that we were going to get sold into. I did talk about the fact that as we made new highs, those were divergent highs. I know a lot of people, think those divergent highs don't matter, but again, it's all about probabilities. And if you just follow price action, you don't have the tools to help you determine where the market's going to go next. You're literally just a victim of where price goes. So if price goes up, you're happy. If price goes down, you're sad. But you're not able to actually anticipate that. And so then you basically get stuck on one side of the trade. For the most part, I see the perma-bulls, they come out, they buy, they're perma-bulls. So when things go up, they come out and comment, and when things go down, they kind of, I don't hear about them. And that's because they're just following price. So, I go back, that's often a clue in terms of where the market's heading. And we made a new divergent high, divergence still remained, and hard selling. So now where do we go? Okay, so the bottom of the range, really the bottom, I think it's about 501.40-ish right here. Or even, we did have that little wick right there. So you could even put it down to about 500 if you want to be safe. But that's, to me, the bottom of the range. I think that's where we're going right now. After Nvidia earnings, that's where I'm anticipating is we're heading down there. And we need to, we need to break that. Now, if we break that, should be a swift drop right to the 200 days, right down there at 489.50-ish. That's a very defined target. The bulls should be buying there. You also have decent support at 483. So maybe, if you head down to the 200s, you might kind of gap down, and then, I see at least a bounce at the 200 days. We haven't hit those for a while, so there should be a bounce at the 200 days. So, if you gap down and hit some of these lower supports, I'd expect the buyers to be there and for us to at least hold the 200 days for some sort of a bounce. And it would likely be a bounce back to the bottom of the range, back up to like 500 or so. So that's what I'd be looking for on that. In the short term, you look at the hourly chart, and we basically hit support yesterday around 510.30 or so. I did point that out to the private member group saying, okay, guys, I'm going to actually cover my shorts and go long for a short-term kind of trade thing up to 519 because that's that breakdown candle there, and there's several reactions, kind of gaps and stuff there. So I was looking for a bounce up to there. We did get that, and I am now short again. However, that was a 1 7/10% bounce after catching the short on the downside for about the same. So nice little almost 3% gainer on that one, and I am short again now. Now I'm not heavy short because Nvidia earnings. I just have starter short positions. in a couple of the Mag 7s. I can go through those, but essentially looking for Nvidia earnings to come out and the market to sell off after that. The initial reaction right when they report earnings, I think they'll spike it up, and then I think they sell that spike and we gap down tomorrow. That's what I'm guessing. Now again, it's very speculative, it's very short term, and it's high risk. So because the risk is elevated, because earnings oftentimes are binary, can go up, it'll gap up or gap down. But because it's high risk, it's position sizing is key. All right, I can't stress that enough. I don't want to be loaded one side of the trade thinking I'm going to catch it, and then it goes the other way and it really does damage. So prefer to kind of take a starter short and then add to that short once earnings clears and we get through that risk event, if proven right. And then if proven wrong, I can always stop out and take small losses on that small position. Okay, so that is the daily chart of triple Qs, the weekly chart, and this is why I think we're heading lower. Again, big negative divergence that's just been building. Here's negative divergence, but it's essentially been building all the way since this former peak right there. All of this price action here has been divergent highs, and that you can see the negative divergence on the RSI and the PPO, and that's why for the most part we haven't really gone anywhere. We broke out above 501.50, and yeah, I mean you went up initially on the breakout, but you went up about 5%, but it's really just been and this is a weekly chart, so it's really just been chopping around, not really moving much higher. So it tells me that this divergent high on the weekly chart is likely going to get sold into. And that means that we would be in for a trend trade to the downside, essentially a correction or a bear market. So doesn't have to happen. We can go put in another divergent high. We could rally this week and put in another divergent high, and so divergence doesn't tell me that it's just time to load up short. We need breaks of support. Okay, so that's all I really have. Support on the weekly. I mean, ultimately that former breakout high right there at about 502-ish. Call it 500 because on the daily chart I said about 500. You break below that, you've then negated all of this price action on the breakout, and that's a lot of trap bulls that really will be likely put in impulsive moves to the downside. Also, we have this bearish rising wedge. So this bearish rising wedge, the measured target, at least on the weekly chart, sets us up for a move down to about, somewhere right in there. We'll call it 469.50. All right, so that's kind of the energy that's been built up in this sideways price action. All these bulls, if you start to break down, they'll become sellers, which help push the market down to that measured target. So that would be my projected target, somewhere around there. And from where we're at right now, that would be a move of about 9% roughly. From the highs, if you want to call it a correction, from the highs down to there, yeah, it'd be about a 13%. So it's like a correction essentially. All right, that's the weekly chart. Let me go back to the daily. Nvidia, obviously the what do they say, gorilla in the room or whatever. You've got on the hourly chart. I don't see much on the hourly, really. Daily chart, we are basically, the divergences have been building in this thing for a while. Just negative divergence. I mean, it's just actually, if I extend it out, I can really extend it way out, and we've right about in there. We've essentially been building divergence for since June of 2024, and that's no coincidence that's a set. You kind of saw the market really top out. Basically topped out. The momentum topped out for sure. And then since then, yes, you've made new highs, but only on this sideways chop. You barely pop over, boom, and sold into. Barely pop over, sold into. So again, looks like topping price action. And it tells me that it doesn't mean this topping price action can't continue. If earnings are good, they're probably going to push this thing up and make a new divergent high. All right, I would say that's where this would go. But it's been doing that for a while. We've broken the uptrend. There's your uptrend on the daily. That's an uptrend with strong momentum. And this is momentum dying. Essentially, momentum's dropping off, and so is price action. So these new divergent highs keep the bulls in there, but it keeps them in there, and then the trap will be set when you get the gap down. A big gap down will trap all these longs because they'll be trapped into losses, and then that is essentially the energy or the people who will become sellers as it moves lower. And that's the feel that you need to push this thing down. So that's what I'm seeing in this one. I think that's what's coming after earnings. But again, it could put in a new divergent high. So that's why it's kind of a binary event, especially in this one. There's nothing to say that we are going to sell off right now after earnings. And so I'd prefer, I want to take a shot at it because I want to have a position if it happens. But if it doesn't happen, I don't want to be hurt too bad. And I'll look to probably, if it makes a new divergent high, as long as it's divergence, I'll look to probably add to a short. But we'll see. Maybe not. I really want to add on weakness, not on strength. So because again, divergence can continue and build, and then eventually it can get burned through. So a gap up, I'm not going to add. I'll probably just add on the gap down. All right, that's really all I'm looking to do. And just a quick look at the weekly chart, okay, just to kind of show you how momentum's dying. There's an uptrend line, and there's the negative divergence. Actually, if you look at the weekly, look at that. There's the weekly. Momentum in this thing's actually been dying since this is actually a divergent high here. So it's divergent high, there's another one. A series of divergent highs as momentum's been dropping. It tells you that the strong bullish buying with increased volume and everything is dying, and you're about to change trend. This looks like topping price action. So, but oftentimes a top, you got to trap the long, so they're likely not going to just sell off intraday and just give all the longs, hey, time to get out, we're breaking down, go ahead and take your profits. That's not how it usually works, because when you get that kind of price action, there's usually not a big drop because you give the bulls an opportunity to exit their positions, and usually with profit. And so that is not how strong selling, and you also give shorts objective entries to get in. You don't want a bunch of shorts in a trade. If it's going to drop a lot, you can't have a bunch of shorts in there because those shorts cover as they start getting profit, and a covering short becomes a buyer, which puts a bottom in. So you really, in order for the big moves come when you trap longs and reject the shorts a good entry. That's where you get the big moves. So that can come on a gap down of earnings. And yeah, so that's why I want to be positioned short. I want to be part of the minority of people wanting to short into earnings because nobody's going to want to do that. And if this thing really moves, I see the 200-day as a target right there. And I'd have to go down to the daily just to accurately show that. But I would see the 200-day. Actually, I had the 40 week period there. The 200-day. We're actually at the 200-day on the daily chart. So for the weekly trade, back to the weekly, I would see a move all the way down here, which is about. Let me see if I got that right. I put this new indicator, technical indicator, trying to track some of the exponential moving averages. We'll disregard that for now. On the weekly, probably target this reaction low here at about 90.81. Yeah, I'd probably just track that, and then we could head down to the 75.90. That'd probably be about where I target for now. All right, enough with that weekly stuff. Back to the dailies. Tesla near support. All right, Tesla's near support. You got this uptrend line, and you're close to there. So you had bullish divergence. It looked like it got burned through, though. At least we'll see how the day closes. But slight bullish divergence, but it looked like it got burned through. So I think you get a bounce around this trend line, but again, likely going to get sold into. So we'll keep an eye on it. Not a short. I wouldn't want to be short this though. The chart doesn't look great for shorting. Again, it's at support. I don't want to short at support. Meta, I still like this one short. Again, we had the big bearish rising wedge. We had the bull trap, got sold into, back within the wedge, got close to that support level, and they bounced it kind of at resistance now. So if it can break out and continue, then I would consider that an actual breakout at this point, because it's already come back within the wedge. But the more probable area, given that we've broken back into the wedge, is a move back down to the support, and then ultimately you need to break this support right here. That's key. All right, that is actually the most objective sell signal, would be a break of support. You can see as I roll back, there's lots of tags of that support, so I need to see that go to really be relatively heavy on that. There's also it's about 634-ish. You want to take out that 634-ish level. And if you do that, I think you go straight down to the moving averages, the 200-day moving averages down there around 567-ish, somewhere right in there. Apple, I need to adjust this trend line right here to capture the top of that big breakdown candle. And you can see we basically broke down, rallied into resistance, and look at all the daily closes. 3 days right there. Even yesterday, they popped it over that level, but closed right on it. So still at resistance. And then today, rejection down to some support. Again, I think that goes, and I think we're heading lower down on Apple. Of course, it'll depend on where Nvidia goes, because if they like what Nvidia says with the earnings, then I can't put it past Apple to do that back test of that trend line up there. Okay, so that is a good possibility. I don't think it's probable though. I think we're going to actually sell down some more. So we'll see. The SPY, which I don't cover a lot because I just feel like the tech sector leads the SPY. It's a better indicator of where the SPY goes given the weighting of the tech sector. But we just recently made a new divergent high. All right, you can see the negative divergence has been building. So when I see divergence just extended, I put good probability that those new highs get sold into. So when you see new divergent highs, good probability you get sold into. So then you look for some sort of breaks of support. We had that break a couple days ago, and confirmation selling. We could come in for a back test of the trend line on Nvidia earnings. That would mean Nvidia earnings came out bullish, and that's possible. But I do think we're heading lower down to the 200-day moving averages. We haven't hit those 200 days since back here in November of 2023. And I'd put good odds that we are actually going to go hit that, hit those 200-day moving averages. And then the buyers should be there. I think, if you drop that far, that would be a move down of about 4 to 5%. Probably tech would be down that 10 to 13%. And then I think you get that. I think you get a good reaction off of that. If you're bullish, Salesforce is at support on the daily chart. You've got support, 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 and just hit it with the 200-day right there. So that's good support. If you're bullish, that's a good spot to buy. We do have earnings coming out today after the bell, though. So, I mean, it's a bullish setup for sure. I don't see divergent lows or anything. I don't see any clues there on momentum. So ultimately, this is likely going to go where the triple Qs goes, which is likely going to be dependent on Nvidia. But technically, we're at support. So if you want to just trade it as kind of a mechanical trader, then you're at support. And until that breaks, you could see that bounce, a bounce off that support. Interest rates continue to drop. Here's your TNX. We're down today, so interest rates are falling. That should be not necessarily. I mean, usually when interest rates drops, it's bullish for the market. But interest rates can also drop if you're seeing a flight out of stocks into bonds. And so far, that's actually what's going on. I mean, you look at like triple Qs, and that's impulsively selling, right? So we're moving out of tech, at least the last couple days, and then back to the 10-year interest rates. Rates are moving down. So money, it's actually a fear trade, all right? And we've seen that over the last couple days as consumer defensives and healthcare have actually been holding up, which are traditional defensive sectors. And bond yields are moving down, so people are buying bonds, which is also a risk-off trade. So that's kind of what's in play right now, is risk-off. There's no indication that trade has reversed. There still is a risk-off trade, and until we see a change, I would assume that continues. So again, just another reason why I think Nvidia probably sells down after earnings today. Wheat, this is the wheat ETN at support, $5. We've seen reactions there before. You can see there's one, breakdown candle, held support through there, and we're at support now. So it's objective to go long wheat or add on as a long for the next leg higher. Gold and gold miners, obviously with interest rates dropping, that should be bullish for gold and ultimately gold miners. However, gold miners, oftentimes, if you're going to see a risk-off trade, the miners will sell down as well. They kind of get washed out with margin calls and things like that. But then ultimately gold should rally. You should see gold, the base metal rally, and then that's usually bullish for miners after that initial sell-off. So could have like a V bottom kind of thing happen. GDX, you've got this upward channel which has been broken now, and we're kind of trading into resistance on the little move up. So I think could be an objective short right here. I'm not going to play the miners, but I do look, Newmont has actually sold down to support, so that one looks actually okay to me because it's, it hit support yesterday. I'm personally, what I'm doing is going to wait till the let's wait to see how this market reacts with Nvidia, what happens with rates. If there's a big move down in stocks, you're probably going to see these miners get sold off, and then but if rates are dropping quite a bit, that's bullish for gold. So look for the base metal to rally on that, and then ultimately the miners will take notice, and they will follow after that initial sell down. Okay, that's all I have for today. So I will get the video out. Drop me a thumbs up. Check out the private member group if you're interested, and I'll catch you guys on the next one.